So now in this video, you are going to find out as property buyers or if you're a property seller that prices of property in Singapore is finally going to do this. Okay, let's look back at some of the highlights. So in the final quarter of 2024, new launches performed exceptionally well, with Emerald Katong was a clear standout, achieving 99% sell-out rate during its launch weekend. Now, Chuan Condo also not bad, 79% of units, while Nava growth is a solid 70%. Even Norwood Grand in the north in Woodlands also sold out at an impressive of 83% sold out rate. Now, overall, 2024 ended on a very high note. The resale HDB market climbed 9.6% and private home prices closed 2024 up by 3.9%, and all this exceeded expectation. And even the very cautious predictions such as those from Morgan Stanley report, which forecasted a 3% decline in private home prices for 2024, were all proven wrong. Not only did prices hold steady, they ended with a healthy 3.9% increase. Now, so with such a strong close to 2024, here's the question on everybody's mind. Where is the property market going to be headed to in 2025? Now, let's look ahead into 2025 and dive deeper into these trends and especially what they could actually mean for you. So, whether you are planning to invest or buy your next home, or simply even to stay updated on the property market, now continue watching because I will break down each of these segments for you. So let's take a closer look at the performance of each individual segment of the property market in 2024, starting with the cornerstone of Singapore housing market, the HDB market. Now, first, resale HDB prices. So last quarter alone, prices went up by 2.5%, bringing the total price increase for the entire year a significant 9.6%. Now here's an interesting fact. Resale HDB prices have been going up for the past 23 consecutive quarters, all the way back from Q3 2019. Now the important question is this. If you are the housing minister, would you want HDB prices to continue with this kind of possibly a runaway trend? So, and then there's everybody's favorite story, the $1 million HDB. Now, if you watch one of my earlier videos, I had estimated that the number of $1 million HDB transactions in 2024 would end on a high, possibly double that of 2023. So, with roughly around 800 to 900 units transacted. Now, I was so surprised when the final number came in. A whopping $1,033 million HDB flats changed hands last year. So again, the important question to ask, if you are the housing minister, would you be happy or would you start to do something about it? Next, let's talk about resale condos, which are now transacting at then record high prices. Now, you might think that now, given the record high prices, it would mean less transactions, right? Surprisingly, that wasn't the case. In fact, the number of resale condo transactions were higher compared to 2023. Now, clocking in at over 13,000 units of resale condos that were transacted in 2024. Now, comparing that to the only 11,000 units transacted in 2023, the year before. Now, does this even make sense? Higher price, more units transacted? But all I know is this. You need to take note of this, that despite rising prices, private condo demand remains exceptionally strong, and the market is giving a clear sign that the demand in Singapore's property market is real. Now, did you know this one thing is probably the most important factor affecting property market in Singapore? Interest rates. Now, just how does interest rates impact property prices? So, interest rates play a critical role in determining the cost of borrowing. Now, for most home buyers in Singapore, purchasing a property involves taking out a home loan. So, when interest rates go up, mortgage rates go up as well, which means that the higher monthly repayment for homeowners. So naturally, this affects the affordability and how likely a buyer will decide to buy. So now when home loans become expensive due to higher interest rates, buyers might choose to wait and see, or they might start adjusting their budgets by looking at smaller new launch units, or even resale properties instead of new launches. Now on the flip side, when interest rates start to fall, borrowing becomes cheaper and more buyers enter the market, pushing up demand. So when developers see a crowded show flats, ultimately developers will also increase prices as well. Now, over the past year, interest rates have been at elevated levels, largely influenced by the global central banks, especially the US Federal Reserve. So they raise interest rates for the purpose of fighting inflation. Now in Singapore, we saw significant increase to SORA, or the Singapore Overnight Rate Average, which housing loans are usually pegged to. As a result, home buyers with floating rate loans experience a higher monthly repayment. However, despite these challenges, property prices in Singapore have remained resilient. Private home prices still managed to increase by 3.9% in 2024, and resale HDB market surged up by 9.6%, indicating that strong demand continue to drive the property market forward. But here's where it gets interesting. When interest rates start to fall, we can clearly see that property prices start to surge up. Now that the home installments are more comfortable to buyers because of lower interest rate, buyers would start to rush back into the market. Now another important factor is geopolitical issues. Now the US Federal Reserve is cautious about cutting interest rate due mainly to the uncertainty surrounding President-elect Donald Trump's plans to impose tariffs on trading partners. So why is that even an issue? Now because tariffs can actually lead to higher costs for goods, driving up consumer prices and therefore causing inflation. And when inflation starts to rise, the number one tool that most central banks use to tackle that problem is increase interest rate. So this really highlights the relationship between trade policies and central bank decision, because tariffs could worsen inflationary pressures worldwide. The Fed may choose to maintain higher interest rate aimed at containing inflation in anticipation to tariffs, which may cause a vicious cycle effect, pushing up consumer prices and triggering even higher interest rates. Let's talk about Singapore's economy. So Singapore's economy grew 4% in 2024, surpassing official projections of 3.5%. This strong economic performance shows Singapore's resilience to global uncertainty like inflation and geopolitical tension. Now, Singapore's efforts to contain the impact of rising costs while staying competitive is actually working. Now, let's look at the relationship between GDP of Singapore and the average non-landed property prices in Singapore. Now, if we quickly look at that, there is a few things that straight away it jumps out to you, which is there's one dip here, one dip here. Now, if I were to dive in and explain to you, this dip, everybody know what's happening, right? It's the pandemic dip. Everybody was actually locked up in home, and that's where the GDP fell to minus 3.9% during the pandemic years. And the second dip you can see just happened just recently, 2023. So between the two dips is what we call a GDP cycle. And this is where you need to watch out, because between a GDP cycle, you can actually clearly see that the prices of property actually increase at a very, very fast rate at the current cycle, which is more than $500 per square foot for the price gain. Now, you will say that this may be a one-off thing, but let us go back in time to 2028, 2029. Back then was also the economy went at a low GDP cycle, and that dip between the two dip, you can also see that the prices of property also increase by a significant amount from this particular GDP cycle. Now I say that it's only twice, not significant, but yet if you look again in 2021 when GDP was minus 1.1%, you can see that clearly that cycle between the two GDP dips is also another close to $500 per square foot increase. So you can actually see that there is a very close relationship between a GDP cycle and the prices of property. So what will be the outlook for the Singapore property market in 2025? Now, for one, there will be increased demand for housing, as I've shown, because a growing economy with rising income naturally will drive stronger demand for property. Now, this will happen in both the HDB resale and private property segments as well. Singaporeans are likely to buy an investment unit or even upgrading their homes to the private property market. Now, with the possibility of lowering interest rates, home installment commitments are generally going to feel very comfortable and very safe for a buyer. So entering a private property market after holding on at the sidelines will seem like a very viable option for many buyers that I'm actually helping out there. Now, the second thing to take note for the outlook of Singapore in 2025 would likely be prices. More accurately, prices are possibly going to be going upward trend in 2025. Why? Because economic growth often will translate to higher property prices, as we have seen over the GDP versus property price data. Now, also because there's an increased demand coming in from the real demand in the market and a reduction of interest rates possibly coming in this year, this would help to drive the home installments to be at a more comfortable and a more safer levels for many buyers, and that will help also to drive the demand for private properties and even HDB resale properties in Singapore. Now, here's the thing that many people might miss, and that is the impact of all the factors affecting the luxury and the foreign investment properties market. Now, because of a robust economy, Singapore will likely continue to attract, if not have already attract, many high net worth individuals and foreign investors. Particularly, these foreign investors I've seen are always looking for the city and the core central region properties, and particularly the luxury property market. Now, in fact, if our property research is correct, we are looking at possibly 3,000 or even more luxury property units in the central and the central core region coming into the market in 2025. And this, with some of them, are possibly going to be pricing at the correct entry price. And if you are looking for an investment property in the CCR area, now you can scan the QR code right now on the screen so that I can share more with you. Now, all the good things must definitely come with some potential risks, and this is one of them: cooling measures. Now, I've said time and time again that all our prices of all the segments are all going up. So what do you think is going to happen next? Right? So while the economic outlook looks very good, and the minister is definitely, I don't think, happy to see that every segment is actually showing signs of the market slowly going on a runaway trend. Now, they might put in or they might not put in any cooling measures. This I do not know, but this is what I know is the majority of Singapore citizens, 80%, are staying in HDB flats. And if you see the report, HDB flats have been on the rise for more than 20 consecutive quarters. Now, if you are a HDB owner or have already MOP or HDB, or even if you're a first-time private property buyer, you might need to take note that your window may be closing very soon before any of these measures may come into play. Possibly, I would say within the first 1 to 3 months is somewhere it's still possibly very safe, but after that, nobody can tell whether any cooling measures will come into play. So finally, this point which many I think will miss out, which is the potential growth in the rental market in Singapore. Now, as more expats and more foreign talents coming into Singapore, you naturally will see the demand for rental that's going to be going up. So when the demand is going up, rental prices will definitely going to be going up as well. And that will bring higher rental yield, which means that potential buyers for investment unit would see that it is actually more likely and more advantageous for them to be entering into the market looking for an investment unit because of a higher rental yield to them. So just watch out if you are also looking out for any of the investment units either in the CCR region or anywhere else in Singapore. Right, do reach out to me. You can see my QR code is on the screen right now. Simply reach out to me, connect with me, and I can share more with you. Hey, this is Pete, helping you take the next step with Singapore Property Pro. And if you still have any questions, just feel free to reach out to me, link in the description, and I will see you in the next video.